how you doing? This is Matthews from M&F Forex Traders. I hope you're doing great. Okay, so I would like to take this opportunity to ask the guys to thank you guys for all the support you actually shown us, for subscribing, for watching our videos. Please would like to say thank you and may you continue watching our videos, and I hope that you're also finding value in our content. If you are, please consider subscribing, watch like the videos, comment in the comment section. Let us know how we can improve as a channel so that we can continue to provide you with valuable content. All right, so today I'm here with a nice video for you guys. I hope you enjoy it. Please, let's get started. You've seen from the title right now, we're going to talk about 5 things I wish I knew before I started trading forex. Okay, so what are these things? So follow along. So the first one is, there is no holy grail. There is no holy grail. So by holy grail, for those who might not understand, what I'm simply saying is that there's no strategy that wins 100% of the time. A lot of us have spent so much time, so much effort moving from one strategy to the next, system hoping to find that strategy that's going to give us 100% results, right? I know I did this in the past. I was always looking for a new strategy out there. I was always trying to find a new strategy out there on Facebook, on YouTube. I was always searching. But guess what? I found none. I mean, I've traded different strategies. I've tried a lot of trend and strategies, support and resistance, a lot of strategies. But guess what? All strategies had losses. That's one thing you need to understand. You won't find a strategy that will give you 100% results. Therefore, you should stop looking and just find one strategy that you're comfortable with, something that resonates with you, and you are really, really comfortable with it, something you can work with. Of course, something that has shown positive expectancy over a series of trades. That's the kind of setup or strategy that you're supposed to look for. Once you find that edge, make sure that you back test it, or test it until you've seen that it is able to give you positive results over a series of trades. Not on a single trade, but when you take 20 trades, it must be able to give you positive expectancy like that. All right. If it doesn't, then maybe you can move to the other one and make sure that you find something that has shown and proven to actually work over a long time. All right. So preferably, I would like you to study or look for something that has to do with smart money concept. Those ones I have shown. I mean, I've seen consistent with those kind of strategies. So please make sure that you look for something like that. Okay. So that's about it. Let's go to the next. This one is very, very important. It takes money to make money. A lot of us underestimate this. Okay, a lot of us underestimate this, guys. For you to be able to make money that you're going to be happy with, you need good capital. You need good capital, guys. This you cannot, I cannot overemphasize this one. You need money to be able to make money. I know you've seen people who are able to like maybe flip a $50 account to $1,000 account, maybe $10 account to $100 to big amounts. Yes, it's possible, but that's difficult for you to actually be able to do that consistently. Why? Because most of the time you find that you're able to you're risking, you're over risking per trade, and it only take one trade to actually wipe out your account. Why? Because you're not following proper risk management. For you to be able to make money consistently without you over risking your account, you need to have good money in your account. All right. I can tell you, I've lost a lot of money in this industry when I just started out. Like, I've lost over 3,000 US dollars. It might not be a lot from you guys. Maybe you are in other countries like the United States, in the other countries, but for a Zambian, that's like let me just do the math right now. $3,000 right now, it's about 54,000 kwacha. That's a lot of money in kwacha right now. So just imagine, I would fund with $100 account, blow it. Fund again with $100 account, hoping to make money out of that, blow it. Okay? Fund with the $200 account, blow it. Why? Because I wanted to make money quickly, and not realizing that I needed to have a bigger account, a reasonable account, for me to be able to actually make consistent income. So what should happen is that when you have a small account, you won't be happy if you made a $10 account. For example, you have $100 account. You won't be happy if you made $20 in profit. Why? Because it's a $20, right? But what we expect is to be able to make, to flip the account probably like in the same day, make $100 or $200, and that's not sustainable. For you to be able to make such returns, you need to have a good account, guys. So I know people who are actually still doing this. If you are still there and you're actually watching this video right now, the best advice I have for you is that save that money. All right, save that money as you are learning. Save that money. Give yourself a period of probably maybe 6 months. Learn the strategy, whatever strategy you're learning. Practice risk management. Know your trading psychology. Master your trading psychology, guys. It's all important. Strategy is not all that important. What is important is your risk management and trading psychology. Guys, you need to save that money. Stop blowing those accounts. Stop blowing those $100 accounts, those $50 account. What you can do with that is make sure that you keep saving that money as you are working on yourself. Save that money as you are trying to master the strategy. Once you have, just imagine starting an account with a $300, I mean a $3,000 account. That was going to be enough profit for you, I mean enough capital for you to actually start with, and you're going to use a lot that you want. Now the thing is that when you have $100 account, it's very difficult to even calculate how much you're supposed to risk per trade. All right, if you have a $100 account, meaning your 1 to 3% of your account is like $1 to $3. I mean, who's going to be happy risking $3 per trade? And if the market goes 100 pips in your favor, you only make probably like a $10. You won't be happy. And that's the reason why most people will actually over risk, use a bigger lot size. Find someone using a one lot, I mean a standard lot on $100 account. I've seen that happen. That's not the way to go. You realize after blowing a lot of accounts, you realize that it doesn't worth it. You'd have just saved your money, and then when you are ready, you'd have just started trading with a good amount of capital. Like for you guys in Africa, in Zambia, for example, like save probably like start with probably $500 to 1,000. That's what I would recommend as a good starting capital for you guys. I know I've seen people make it with the $200 account, with the $100 account, but it's not sustainable. Why? Because those people are usually using bigger lot sizes, which are not supposed to be used on such an account. So what you need to do, guys, is save up enough capital, find a job, save enough capital, learn the skill, master trading psychology, master your trading your risk management, master your strategy, and then come to the market with a stronger mind, and you're able to actually do this. All right. So please, those people you see making a lot of money, they have a lot of money in their account. All right. So please save your money, master the strategy, and come back when you're ready. All right, let's go. So a Forex mentor is a must. Whoa. Like personally, I never wanted help. Okay, I thought I would do it all by myself. I was like just jump into it. Like I just went on YouTube, watched videos, read a bunch of books. But guess what? It had to, because of that, it prolonged my learning curve. All right. It took me quite a long time before I could actually understand the concept. Why? Because I never had a mentor. All right. So you don't have to go through that process. You don't have to lose all that money. Just imagine $3,000. All right, you don't have to go through that path. So what does a mentor do to you? What does a mentor do for you? So when you find the right mentor, they are going to shorten your learning curve. They are going to shorten your learning curve. So, for example, if I took 2 years, it probably take maybe 6 months or less than a year for you to actually understand. Why? Because that particular mentor has been through what you want to go through, right? They know exactly what you're supposed to actually do. The Forex industry is broad, there's a lot to learn. So, you have to have someone out there who's been through what you want to go through so that they're able to show you exactly what it takes to be profitable. All right, exactly what it takes to actually have that consistency that we all want in the market. And when you go at it alone, it takes a lot of time. It will take you a lot of time, and like having someone out there to actually teach you the whole process. All right. So instead of losing $3,000 for you to actually uh, be consistent, what you can actually just pay for mentorship. Pay for mentorship. Once you've paid for mentorship, they're going to teach you in the space of 2, 3 months, 4 months, and you can actually become better and like trying to figure it all by yourself. I know how it feels. You'll be like, no, I taught this by myself. No, I did this all by myself. Yeah, that's nice, but there's a price to pay for that. You've paid the price, and initially it doesn't all worth it. Okay, you'd have just paid the mentor and they'd have just taught you. I know there's a lot of people out there all pretend to be mentors. So make sure that you take your time before selecting who your mentor is. Make sure that you take your time, guys. Find out about that particular person. If they have a YouTube channel, look at their content. Is that something that you would like to do? Is that something that you would also want to do? Okay, don't just choose anyone out there because they are posting cars, they're posting results. Don't be deceived by all that. Choose a mentor that is showing you the process of everything. Okay, and someone that you can actually connect with. That's very important. So you guys, don't try and do it all by yourself. Please ask for help. It's better to pay that fee than to lose a lot of money and realize after 3, 4 years that you're supposed to have a mentor, and then look at how much money you'd have lost by that time. So you guys make sure that you find yourself a mentor. They're going to help you in shortening the learning curve. You don't have to lose all that money and have to find out. All right. So let's go to the next one. So guys, strategy accounts for 10%, risk management accounts for 30%, and trading psychology accounts for 60% of your trading success. Whoever knew? Like when I started out, all I wanted was, like I said in the beginning, all I wanted was to have the strategies that was going to give me like 100% results, and that's what all of us, most of us, are actually trying to do, especially new traders. They're just trying to find that particular setup that's going to be giving them 100% results. What they forget is that actually the trading strategy only accounts for 10% of your success. I'm telling you, you can have the strategy with 90% win rate, but if your risk management and the trading psychology is a mess, you end up blowing that account. Okay? You can have a proper strategy out there. I can give you a nice strategy that works, but if your risk management and the trading psychology is poor, trust me, you will not last in this market. Okay? Why? Because you want to win every trade that you're going to take. You want to win, and guess what? That's a trade that's going to actually take you out. So you need to have proper risk management. You need to have proper trading psychology. Okay. So there are a lot of books out there that teach about risk management and trading psychology. There are a lot of books. So for trading psychology, I would recommend that you watch all the videos for Mark Douglas. That guy impacted my trading career a lot. Make sure that you watch his videos. Read Trading in the Zone and Disciplined Trader. Those books you're supposed to read. And please watch those videos I've talked about, where I talked about probabilistic mindset. Watch those videos because those are very, very important. So for trading psychology, those are the books I recommend and the videos I recommend. Okay, and then risk management also, there are a bunch of there's a bunch of videos out there, but on this particular case, you guys just need to understand that you need to be able to risk 1 to 3% of your account, and always predefine your risk every time before you actually take any trade. Use a position size calculator every time you're deciding to take a trade. And the first question you should actually ask yourself is, how much am I willing to find? How much am I willing to lose? I want to find out if this trade is going to work. How much am I? And that's your risk, and you should be consistent with that. You should be able to actually take that as a risk every time you take a trade, because you find that your results are going to be consistent like that. You shouldn't be losing much more than you are winning on a particular trade. If you are doing that, most likely because you are not following your risk management. Trading psychology, there are a lot of strategies out there, and yeah, so you don't actually need a strategy with 80%, 90% to actually make it. You know, what you need is not a strategy that has a higher win rate actually. You need to focus on risk to reward ratio. For example, our strategy has actually a low hit rate. All right, like trade by trade basis, you won't actually have like a bunch of winners in a row. But what we have is a big risk to reward ratio. You guys, I can take 10 trades and lose 8 trades. But if I win those 2 trades, I'm still going to be profitable. You get how powerful that is? You can win 2 out of 10 trades and still be profitable, provided you are following your risk management. And that's the most integral part about our strategy. So you don't actually need a strategy with 100%, 90%, like it's advertised on Facebook, on Telegram. I know you've seen all those. That's not sustainable, guys. Those people are just trying to lower you into their platform so that you can pay the money. And once you do that, you find out that they are not actually winning all the 90% as they're claiming. Why? Because they don't want to show you the truth. They don't want to show you that they're losing, which is very sad, because losing is part of this game, guys. If you follow our Facebook or our Telegram channel, you realize that I post both winners and losers. Why? Because I want to show you the reality. You don't have to hide, like most people hide their losses, which is a shame, because losing is part of this game, guys. That's the only reason why you should use proper risk management. This is all I'm preaching every time. Make sure that you follow your risk management. It's easy to say like this, but when money is on the table, you start to panic. You don't have to panic, guys. Risk 1 to 3% of your account. Make sure that you're comfortable with that risk and stick to that, guys. Have a proper trading plan, a trading system that has everything in place. All right, guys. So let's go to the last one right now. So this is probably the most important of all things I'm talking about right now. If someone told me that it was all probability, if someone told me that in the beginning, right there in the beginning when I started trading, if someone told me that it's all probability, when a trade wins, doesn't mean that you're actually right. If a trade loses, doesn't mean that you're wrong. It's all probability. No one in the whole world knows when a trade is going to win or lose. Okay, unless the institutional traders. Okay, unless you have inside information, which is illegal. Otherwise, no one knows when a trade is going to win or lose, guys. And you don't have to know, because it's all probability. So what you need to understand is, take your trade as long as you have the strategy that has shown positive expectancy over a series of trades. So what you need to do is stick with that strategy. Risk only 1 to 3% of your account consistently. Always calculate your risk every time and do that consistently. You don't know which trade is going to win in no particular order. There's no way to know. So what you need to do is be consistent with identifying your setups every time. predefine your risk every time, and just let the results take care of themselves. Okay, you don't have to know whether a trade is going to win. I've seen beautiful trading setups failed. Like I've seen nice setups failing, nice ones really, really looking good, but it still failed. Okay, so there's no way to know which trade is going to win, and you spend your life trying to find that one, but it won't be there. You realize that you have wasted much of your time. So you guys, make sure that you understand that it's all probability. And for you to engrave this concept, I would also refer to Mark Douglas. Watch those videos, read Trading in the Zone and Discipline Trader. You'll be able to understand these things better, guys. So you guys, I really, really hope that you actually found value in this video. If you have, please don't forget to subscribe, like the video, comment in the comment section. Let me know which part of this was actually important to you and what you learned in the comment section. All right, you guys, thank you so much for watching. Until next time, goodbye.